It's Brian Preston, the money guy.
Distortions are coming to the markets, and you need to be careful. Anybody who invests, you need to understand two big things have happened in the last year that will impact how companies report their earnings. And the first one is the tax reform and upcoming what that impact is on corporate income. Sure. And I thought this was kind of interesting because it shows you that 2018 is going to be a very unique year when it comes to earnings and how companies have to report this, because listen to this quote from Warren. It said the $65 billion gain is nonetheless real, meaning that Berkshire Hathaway appreciated by $65 billion since last year. Do you know how big Berkshire Hathaway is, by the way, Bo?
No, I don't. You don't need to look that up?
I looked it up.
Oh, okay. Well,
it's $702 billion in assets.
Wow.
And $348 billion of equity after you take out liabilities and so forth. So you can see to have an increase of $65 billion is a big deal.
Yeah, that's substantial.
So he goes on. He says, but only $36 billion came from Berkshire's operations. The remaining $29 billion was delivered to us in December when Congress rewrote the U.S. tax code.
I love the way he writes, though. Like, he says that $29 billion was delivered to us. Like, somebody just handed him a present. And that's kind of what happened. And so what he's saying is, and correct me if I'm wrong in this, had the tax code not been changed, then their profit or their earnings would have been listed at $36 billion as opposed to $25.
That's exactly right. Yeah. So this is a big batch of money that is coming their way. And here's what's interesting about this tax change. I mean, because you realize we dropped down to 21% for C corporations. Right. I mean, that is a substantial drop. So this is going to somehow work its way through the economy. We'll see. It still remains to be seen, sure. but it's pretty optimistic based upon what Mr. Buffett had to say.
And so, if I'm just a normal, average, everyday investor out there, and I hear that this company, Berkshire Hathaway, last year might have had $36 billion, but now it's $65 billion. What are the real-world consequences of that? How will that affect me as an everyday investor? What are some things that I need to be looking at?
Well, you just need to be thinking about, okay, if we know that the majority of companies, all the companies that are in the S&P 500, to be a public company, these guys are structured the same way as Berkshire Hathaway. A lot of this is going to trickle down into your 401k. It's going to trickle down into your Roth IRA, sure. your rollover IRA. However you save, you need to be mindful of. Warren is showing us that there's a big impact here. Okay. So pay attention. And it's the second thing, because this is a good one. I'd put market distortions and TV talking heads could be bad for your wallet in the coming year. And what I mean by that is that Warren shares with us that there is a brand new accounting principle that they are required by law to follow. It's a gap principle, okay. which basically says that they have to now recognize the gains or losses of unrealized gains or losses. Meaning these are stocks. Realize Warren Buffett and Berkshire Hathaway, they have $170 billion of marketable stocks, meaning okay. they go out there and buy Coca-Cola. IBM, Wells Fargo, and others, and they just have ownership. Southwest Airlines. Right. There's a whole list. You go to the letter shareholders, they'll give you the list of what they own. They own those stocks. And in the past, because they want to show you the income based upon operations, because realize Berkshire Hathaway is set up in a unique way. Mm-hmm. A lot of people, and I think that's where they think they can go out there and replicate what Warren does by buying General Electric,
right?
Or doing something like, or Bank of America, like,
right.
Because those are some of his famous deals. It's hard when you realize that only 24% of Berkshire Hathaway's assets are coming from those marketable stocks, the stocks you and I can buy. The majority of their business revenue and operational profit is coming from private businesses coming to Berkshire Hathaway. And that's where I said it. He's shooting fish in the barrel. They come to him. They go out there and they look for some of these, and I'm going to get into that in a minute. But he also has a lot of deals that come to him, and these are great businesses that we'd all love to be a part of that he gets to bring into the Berkshire Hathaway family. Sure. So it's hard to reproduce what he's doing. So he's saying that the public needs to be aware of what profit is from operations. That's going to be harder now that they have to also include this $170 billion in the valuation it has on January and how that's different on, December or however their year end is.
That's right.
That is going to create some fluctuations. And his concern, and I'm worried about this for all of our viewers and anybody else who's an investor, this could create some distortions. And the fact that the guys, you know how it is. When a company releases earnings, it's at the close of business. The stock bell rings at 4 p.m. Eastern.
Right.
right after the bell rings, earnings get released. And pundits immediately go out there and they try to figure out, is it good news, bad news? And they give an opinion really quick. And there's a whole race to be the first one to give the opinion. Warren is saying be careful, because some of those off-the-cuff predictions or reads of the earnings are probably going to be wrong, because they're going to be either inflated or they're going to be depressed because of what's going on with the change in market value of stocks they might own.
Yeah, and I love the way that he wraps this up in this little quotation that we pulled out. It says, consequently, media reports sometimes highlight figures that unnecessarily frighten or encourage many readers or viewers. Meaning that you're hearing some stuff that might cause you to feel or behave one way when realistically it hasn't changed the underlying fundamentals of the business. And so when we think about, okay, well, what's Warren saying to us as the average investor? You need to listen for those things that come out that might frighten everyone else, because that's the opportunity. That's when you should seize the opportunity. And then the things that encourage people, or maybe they get a little too excited, a little overheated, that's when you kind of need to take a step back and think, are things really as good as they seem?
It's that whole echo, and anybody who's a student of Warren Buffett and Berkshire Hathaway knows, be fearful when others are greedy, and greedy when others are fearful. I mean, that is exactly what that is an echo of.